All right, we're on to our last topic. Oh, first we have Rex that wants to say hi. He's a black tuxedo cat, and he's very needy. Yes, he is. All right, on to our next topic, which is going to be our last topic, woohoo, which is topic 6.6, how to prepare a multiple step income statement. As I mentioned earlier, you guys can read through the simple income statement. We're going to focus on that more involved multi-step one. So that is going to be our next topic, so get ready. I know you're thinking, how do all these new accounts that we've learned, how do they fit into our financial statements, right? We learned all these new accounts this chapter. Where are they going to go in our financial statements? Well, we already, identified where they would go, but let's see how they're going to appear. All right. So when we first started off our wonderful financial statements, right, we were introduced to 4. We had our income statement, our statement of retained earnings, our balance sheets, and our statement of cash flows, right, which we get to later. So last chapter, we learned about a new way to organize our balance sheet. It was the classified format. This chapter, we're going to learn a new way to organize our income statement, and it's going to be called the multi-step income statement. Okay, and specifically the multi-step is helpful for merchandising companies, right? So it's still going to be our normal income statement. You don't even have to say multi-statement. The reader will know by looking at the format that it's multi-statement. For the year ended December 31st, something or other. All right, so now we have sales revenue instead of service revenue. We have those 2 new contra accounts, right? Those 2 new contra accounts, contra revenue accounts. Remember, contra revenue accounts always appear directly below whatever they're paired up with, in this case, sales. So you're going to say less sales discounts and sales returns and allowances. I would put, in terms of the ordering, whichever one had the higher balance should come first. The difference is going to be net sales. Okay, don't worry, we'll work through and we'll put some numbers to this eventually in an example, but just now so you can get the formats. You subtract from net sales another new account called cost of goods sold. That gives you what's called gross profit, the company's gross profit. From gross profit, you subtract operating expenses. These are the expenses we're used to seeing since chapter 2, rent expense, salaries and wages. But we're going to further subdivide this category into selling expenses and admin expenses, administrative expenses. Let me tell you items that are always going to be considered selling. Advertising. Remember the shipping expense we just had? Mm-hmm. And if you see something like sales commission or sales salary, okay, those ones are always going to be selling. You might have additional selling expenses like a portion of your rent or a portion of your utilities, but these ones are always going to be considered selling. And let me just fill out the example, maybe some rent, maybe some utilities. Okay, so we add all these items up. Like I said, we'll put numbers to it in a second. Subtract all your operating. Let's do a total for operating expenses. Total op expenses. Subtract that from your gross profit. And that instead of giving us net income, it's called income, or in the event that we have a loss, loss from operations. Okay, that's an important number for us to look at. All right, but we're not done. The statement actually still continues. Now we're going to have what's called a non-operating section, where we're going to include items that we consider other revenues or expenses. Some of the most common ones would be like interest, income, or interest expense. Income or interest expense. Okay, you can read through the chapter for some other examples. Subtract or add all those. Now we get net income before taxes. Okay, so we add, we subtract, and we finally get net income. Woohoo! All right, we'll work through an example in the next video.